morning. It's your favorite coach, Larry FX Academy here again. And I actually want us to do a rundown analysis on the Volatility 10 index. Now, for this Volatility 10, we categorically would agree with me that we've had one, which is using what we can currently see on the chart, we've had a break of structure at this point. And then we've also had what we can categorically call our downtrend for. We have also had our downtrend, using these two levels. Now, having understood that we've had our downtrend, one thing you need to understand about a downtrend is it creates highs and lower highs, lower low, lower highs. You can simply call this a lower high, lower low, and just like that towards the downside. Now, at this point, we can clearly see that at this point here, we can clearly see that the trend changed. So the moment we can clearly see the trend changed here, that now would help us to understand the current market structure we are watching out for at this area here. Now, based on that reaction, we clearly saw that the current market structure we are watching out for here is now market change after this break to an uptrend. Now, having seen that to an uptrend, now having seen market give us a change to an uptrend, one thing we clearly saw again was this reaction. So this reaction was market creating what we can simply call an uptrend. So you can see this reaction was market creating an uptrend, a trend to the upside. Now, based on that, we can now go to the smaller time frame, understanding that market has actually broken structure here. So since market has broken structure at this point, what do? We can now go to the 4 hours time frame to understand the character of the market, to understand what we can actually see to help us identify and get or take better decisions in this particular market. Now, to clearly look at it, we have this area which gave us our break of structure here. Now, this area which gave us our break of structure here also had a break of structure to the upside. Now, this was a break of structure to the downside actually before the break of trend line, you can all see. Now, this area also had a break of structure to the upside, which some other persons can call liquidity grab. But now, I would simply call it both. Like, I would simply call it a liquidity grab because actually, after market broke structure to this upside, it didn't take it out. You understand? It didn't break above this previous high. Let me make it clear for you guys. So market didn't take out this high. This high actually was lower than the previous high. So that high being lower than the previous high helps us to understand that the trend has actually changed. You get? Now, how did we take hold of this particular entry? What happened actually if we were to be analyzing this market at this time? Let me take it to the smaller time frame so you can see it clearly. Now let's go to the 1 hour time frame. Now on the 1 hour time frame, what clearly happened on this market was this. So on the 1 hour time frame, what clearly happened on this market was this. We got a clear break of structure at this point to the upside. And we had a higher break of structure at this point, which made it an interesting level to look at. Then we picked our Fibonacci retracement tool and we marked it across. Now, having picked our Fibonacci tool and marked it across, we clearly understood that market retracement got into our 0.618 level. Now, when it got into our 0.618 level, this was it here, clearly. Now, when it got into this area here, we basically saw market pushing up, and this, it gave us what we call a candlestick confirmation. A candlestick confirmation. And whenever you see a candlestick confirmation, that actually clears your doubts a little bit on your entry. Now, what was the candlestick confirmation we were given here? It gave us a bullish engulfing candlestick confirmation. Thereby, the bullish candlestick that closed after the last bearish candlestick before this push to the upside, it engulfed it. It engulfed the candlestick. So that way, yeah, so you can see it here. It engulfed the candlestick, thereby closing above the previous move. You understand? That way, we could actually capitalize on our movement. You understand? So that way, we could actually capitalize on our movement to the upside. So that way, we got we took an entry. If we got this move, we'd simply take an entry at this point, and then these levels are take profits, which are one resistance, this resistance, and then this one. Now, the moment this actually was where market reacted from, and it didn't get into this slashing away these highs. You understand? So that was just it. And then ideally, when you begin to see a kind of serious pullback, the candlestick, you actually will exit the market. There was actually a reaction. So after this actually happened on this market, then we can now understand then we can now understand what happened next. So what happened next was this. Why market was pushing to the downside, it gave us a break of trend line. I say a break of structure. So market gave us a break of structure earlier on at this point, and then gave us another break of structure also at this point here. Now, what am I trying to do? I want to actually explain in detail what has been happening in the market in order to help us understand the reason behind what is currently happening in the market. So that is actually how we go about analyzing the market and using top-down analysis. Now, when we did this, when we found out that we got a break of structure here, market retested into that level, what would have been our mode of entry on that particular time frame, on that smaller time frame, this first break of structure? After we got this first break of structure, all we simply would have done was to mark this level and then mark this area here. So when we mark these areas, we will clearly see that when we mark these areas, we can clearly see that markets got into our 0.618 level within the zone. It got into our 0.618 level, put our stop loss, and then you can see market hit take profit on that one. Let me pick a short too. And you can see the moment it tapped into it, it retraced into it 3 times. It had retracement into the level thrice, and then it moved, hit the take profit. So this would have been your take profit for this particular trade, and then you're done with this one. Now, after that happened, we got market dropping down up until it dropped into this point. I don't really want to say we would have taken that entry. Now, using this strategy, we would have not taken that entry. Now, we mark this high again. Now, having marked this high, we will clearly see that we will drag market into, and we saw this retracement where market reacted into this upside. We'll simply mark it down to this low here, where we got retracement. So when we mark that, we can clearly see that when market retraced into the upside, it got into the first entry, gave us reactions. If we would have taken our trade on this particular one, we would hit our stop loss, and that doesn't mean we would not take the trade. We would have taken the trade, and market will hit our stop loss, which is on this one. we would have taken our trade and market will hit our stop loss, which is fine. That is for this particular trade. And then we had the next one, which is on this one. We would have taken our trade and market didn't hit our stop loss. It moved right into take profit. So that's being the case, that's what we would have done. Sorry guys. So having seen this, we would simply just click on our chart and let's go to the current timing. So on this one, if we were to go for analysis on this area here, what we would have simply done was we would have simply, oh sorry, that was that for that. So on this one, what would have happened was that we mark this break of structure here and then would mark our analysis down. But then I don't want to really spend a lot of time going through analysis from all those areas. So now on this area, what would we have seen? One, break of structure, candlestick close below our trend line. Then we mark our break of structure here. Now break of structure at this point. Having marked our break of structure at this point, we would also mark the low. Now when we mark the low, we can clearly see that when we pick our Fibonacci and draw it down to the low which was created, we would see that market made its retracement into the 0.618 level, and this was the entry here. On the 0.618 level, market gave us our stop loss here for the first entry and our take profit at this point. So this was actually our trade for this break of trend line area. Now, markets having done that again, what we would have simply done again was analyzing the market to take the next entry. We simply have a break of structure at this point, which actually was a break of structure within this area too. We now clearly have what we call our liquidity grab or stomp point, which is a very important thing we look out for when analyzing the market a lot of times. It gives us high probability setups. Now, when we look at that, we can now simply mark our Fibonacci from our point A level to our point B level using this particular formula, which is let me picking our point A. So picking our point A, mark our break of structure from our point A to our point B, which is this. So from our point A to our point B, and then having done that, what we can clearly see is market reacted to that level by giving us reactions into this point, and then using that reaction market gave us would help us take our shot from this point. We'll input our stop loss, and then we've gotten our take profit, which is a good risk to reward ratio for this one. Having done that, this trade has been triggered and it has hit take profit. Now we can now go to the next level, which we are currently trading at the moment, which we have liquidity grab here again, and we also have our break of structure here. And also we have our level B using our zoning. So all we simply do is this: we simply mark our Fibonacci to from this high to this point, and then we clearly would put our level A at this point here, our level A and our level B. And we also have what we can call here becomes our break of structure. Here becomes our break of structure, our new break of structure. And then we also have here as our liquidity graph. I would use L. So I'll use L for our liquidity graph. So we'll have here as our liquidity. So this is actually all we've got, and we can clearly see market got into our 0.79 level, and then we are chasing our take profit. Now this is a current running trade you can take as a signal if you get to watch this video at the moment I post it. It's actually a current trade you can take as your signal. Okay, sorry. Now if you're taking the trade, you can simply put your trade here and then put the stop loss here. But then ideally I would simply advise you use a smaller lot size and put your stop loss here after taking your entry. You understand? But originally this is where we took our trade from. We took our trade from this particular point, and then this is our target. So when market hits take profits, I would either make a video to show you guys that the market has hit take profit or it has hit stop loss. So that is it for the volatility 10 market index. Have a wonderful day, guys. Peace. Larry FX Academy.